Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and this is what's moving. Let's start off with the S&P, down almost 3% today. You had major three-star support. So Morning Express, 2710, 2717 did hold on the session. Now, we opened up intraday down below 2787. This was the settlement going back to last Thursday before the market rallied about 100 points. There was a gap there at that close from Thursday, and we opened up today's intraday session below that. You settled yesterday at 2806, so you had a big pocket of resistance, 2787 up to 2806, and the bears now have a near-term edge while it's below there. Now, let's take a look at the chart real quick. You see what we're seeing here. Ultimately, the S&P did break below this trend line today. And again, the bears have an edge below there. 2710, 2717 is our major three-star support, our first one. But below there, we do have 26 and a quarter, 2640. Here you can see this is 2640. It's a shelf there. A number of technical indicators that align with this area. Also, a tremendous amount of volume. This is the volume that was traded in this region on the chart here you're looking at. So on this recovery, there has been a tremendous amount of volume traded in this area. It's going to be a tough one to really chew through, at least in the first wave down. So if you are short, if you got puts, make sure you capitalize down if this thing gets down to 2600, 2640. And then the Nasdaq today, same sort of shelf, 8300. It did hold this area here, 8300. And then the recovery failed, testing previous support near 8,500, which is now resistance. Netflix after the bell, which has been one of the stronger stocks out there, jumped about 5% initially. It's pared all those back after earnings. So see how that trades, how some of the leaders have traded. But overall, again, you had a lot of red on the board today. Banks, tech, and not just energies. And speaking of energies here, crude oil, the May contract, it's gone. Finally, we could forget about it. Negative $40 yesterday. Came back quite a bit today. But what we're focusing on is the June contract, which traded to a low of about $6.50. Now, that's important because it's a new all-time record low in crude oil. Because yes, June is the front month. It was the front month yesterday too. So that's what really matters. Took out 1986, about $9.50. And about 1998, you had about $10.50. So we traded below there, new record. Didn't settle below there. Didn't seem to settle below there. However, we're back up near $13. API, inventory data, EIA data tomorrow. But the volatility is going to continue. So make sure you manage your risk when you are trading crude oil. A lot of volatility ahead. But on these back months, this is what we're looking at here. Take a look at these charts. Look at the December. Now, December did not settle below this March 18th low. This is going to be the area to watch here in December. September as well. It did get down below there. It settled right at it. Now, this area, 25, 34. Now, if it stays suppressed below 25.34, then you're going to see continued pressure. So keep that in mind. And then the other one we're looking at is Brent. June Brent, 1733 was a support level we talked about in the Morning Express. It did not break below there. That was the low, 1750. It came back about 1970 now. So keep in mind that Brent contract as well. It's not been as bad as WTI. There is no storage though. So I think the market's really pricing in poor numbers, additional builds here through EIA tomorrow. Again, I would not be surprised to see June. Wake up tomorrow and see June negative or June at $20. Manage your risk. One thing we do like today, though, gold has traded extremely well, given the deflationary waves, given the little bit of a stronger dollar today, given the weakness in the equity markets. Remember, gold has been trading with equity markets. So you've seen a lot of headwinds here for gold. It's battled through here. And then take a look at this chart. We find very constructive. We've been talking about this in gold quite a bit. You have an inverse head and shoulders. You got this shoulder here, and then the head. This broke out of this neckline, and now it's retesting this neckline, which also happens to be 1700, the psychological level. So great action, leaving a tail today. You would think this paves the path of least resistance higher. However, we're still skeptical given the wave of deflation here. One thing that is a tailwind for gold, though, is weaker Treasury yields. We do see a new low on the swing here in the 10-year. This is a 10-year note yield, 50 basis points. So watch this area. 50 basis points region has been supportive. Getting below there, breaking below there, staying below there would be signal for lower yields, potentially a move to zero coming. But keep that in mind. And then the prices. This is the 10-year note we trade. The prices, very nice move up here over the last several sessions. almost like a flag-like pattern here, and it looks really good. It's still a shelf. It's trying to get through about 139.5. We are long the 10-year note in our Trade Alerts program. We are long there. Contact us about the Trade Alerts program. We'd be happy to talk about the trades we currently have on. It's up 13.9% this year, but the 10-year note, we do have a call condor on right now in the 10-year note. So give us a call if you want to talk about that. Obviously, there's going to be a lot of volatility going forward here. We're here to help. Don't hesitate to reach out. Give us a call, 312-278-0500.